Good day, everyone. Welcome to our confidential report for April 2019. As usual, I'd like to start by looking at America because I think it influences all the economies of the world, including South Africa. So on your screen now, you should see the S&P 500. And I've put in some markings here to help you. There you can see the record high on the left-hand side. That was 29.30, and it was made on the 20th of September last year. And then from that record high, we went into this correction, as you can see outlined here. And that was marked by Donald Trump's shutting down the US government over the Christmas period, which resulted in this V bottom, which I've described to you before. But in the process, he created a resistance level here at 28.13 on the S&P 500. So as we recovered, when we reached the 28.13 level, which we did over here in February, you can see that we hit that resistance and bounced back off it, went up again, hit it again, bounced back down again, came back up to that level and bounced it twice there, and then penetrated through it. And then there was one last correction back to the resistance level, which of course then became a support level, as often happens. Often when you have a resistance level like this, you bounce it a few times, you break up through it, and then you come back down to it, and so resistance becomes support at that point. But in this particular case, we had the Apple results, which came out over here on the 25th of March, and they were a disappointment. The Apple turnover was down 5%, their iPod sales were down 15%, and the share fell 7% in a single day. The investors didn't like it, and that of course dragged the S&P 500 down about 2%. So here you can see that single day, but the market recovered very quickly. A more in-depth reading of the Apple financials showed that they hadn't done nearly as badly as was thought, and there was a strong recovery, and since then we've had a fairly clear upside breakout, which you see developing over here, including last night where the market held on to this higher level of 28.67. So now we expect that the market will continue to move up. It is now within 2% of this all-time record high, around 2.1%, and we believe it will go up and break that record high in the next few weeks, and go on to resume the bull trend. Of course, once that record high is broken, the great bull trend, which has been in progress now for 10 years, will resume. So this will be the longest bull trend since the Second World War, and I think that once we break above 29.30, and I'm talking about convincingly above that level, then you should see a very strong upward surge in the index as people realize that they are once again in a bull trend, and the correction will by then have lasted probably about 7 or 8 months, which is quite normal for a correction of this sort. The correction at its lowest point in the V bottom there took the index down about 16 or 17%. So it's quite a healthy correction really. But what you must remember is that during this period of 7-8 months, the S&P 500 has not reflected the enormous growth which has been taking place in the American economy. So once it breaks above that 29.30 level, you should see a very strong upward move. The fundamentals of the S&P 500 companies in the fourth quarter of last year was excellent. Earnings in the first quarter of 2019 are about to start coming out. They usually start coming out in April, and I don't think they'll be as strong as last year's for a variety of reasons. First of all, of course, we won't have any further tax cuts from Donald Trump like we did have last year. In fact, the average tax rate last year was 19%, which is fantastic. And this year it's expected to be 21% in 2019. But both of those, of course, are considerably lower than the 24% which we had in 2017, which explains why, one of the reasons why the bull market continues. Of course, you mustn't forget that the labor market in America is very close to full employment. Wages are getting to the place where they'll start rising. Unemployment there is below 4%, and of course, it's becoming more and more difficult to find employees as the economy grows, so that tends to push wages up. This will eventually impact on corporate profits and hence on share prices. But we remain very bullish on the S&P 500. We believe strongly that it is going to break that record high in the near future. So now if you look at that in regard to the JSE overall index, you can see that this bullish trend is also being reflected in the JSE's overall index. Here you can see I've just put a trend line in there to show you the upward trend in the overall index, and of course in markets right around the world. If you look at the FTSE or other markets, you'll see that they're all following Wall Street upwards. All right, let's just turn our attention to the local situation, and particularly I want to look at the political situation. Of course, we're less than a month away, or around a month away from the election, and the situation is very fluid. In December last year, there were a number of polls that came out, quite reliable and reputable polls that came out, testing people's attitudes towards the election. And at that time, the ANC was predicted to win between around 59 to 60% of the vote, of the national vote. However, since then, various things have happened. 5 things in particular have happened, which I believe will negatively impact on the support which the ANC can look for. The first one is, of course, the publication of the ANC's candidate list, which came with a number of shocks. There are plenty of very dubious names in that list, and people who've been found to have lied under oath and so forth. And I believe that there's a big debate going on in the ANC about who should be included in that list now and who should be removed. Obviously, that is going to damage the ANC's prospects in the election. The second, of course, major thing that we're all aware of is that load shedding, which has now stopped, but which gave us a nasty shock in March, I think impacted on a lot of people's views. They would naturally hold the incumbent government responsible for this, so the ANC will probably take a bit of a knock there. Then, of course, we've had Mr. Agreezy at the Zondo Commission implicating the top 6 on the NEC, the ANC's National Executive Council, the top 6 there, and he said that they received 12 million rand from Bosasa. And that has tended to give people the impression that the ANC is rotten from top to bottom, and I believe that that will have an impact on election results. Then, of course, there's today's petrol price hike, which sees the petrol price go up by a record 131 cents per litre, 1.31 rand, to a new high. Well, it's not the highest level it's been at, but still pretty high, and I think that the population generally will feel that in their pockets as they get into the taxi or as they fill up their car at the petrol station, and they will tend to blame the government for that. And then, of course, more recently than that, we've had Jacob Zuma saying very publicly that he supports the Black First, Land First movement, political party as it is now. And he was talking about radical economic transformation and encouraging them to take that into their own hands. I'm not quite sure. It's difficult to assess what sort of impact Zuma can have on the election, but there's no doubt that he has a following in Natal, and it may well have an impact on the ANC's percentages. So this could easily shift the election away from the ANC, and to some extent I think it will benefit the DA. And this is very important because overseas investors particularly are waiting for this election to be behind us. They're expecting the ANC to win with a comfortable majority, and they think that that will give Ramaphosa the mandate he needs to do the deep level reforms that are required in the South African economy. If he does not get a strong mandate, he may not be able to confront the unions. And everybody who studies the South African economy knows that sooner or later the unions will have to be confronted in this country. So anything that impacts on the ANC's election prospects is having an impact on the rand, the strength of the rand, quite naturally, as people blow hot and cold on whether or not the ANC is going to get returned with a strong mandate. But I think Jacob Zuma has realized that he is being thrown to the wolves. The courts are after him. The government is no longer allowed to pay his legal fees, and it's simply a matter of time before he finds himself under some pretty severe pressure, I think. Okay, let's turn our attention to the economy itself. The final figures came out for 2018, and they showed a growth of 0.8%, which was just fractionally better than was expected, mainly because manufacturing in the final quarter delivered 4.5% growth, which was very good. That was expected to carry over into the new year in the March quarter, but then we had load shedding, and that showed us that Eskom was still in a heap of trouble. And the load shedding is estimated to cost us between 0.3% and 1% of GDP, depending on how pervasive it is. The South African Reserve Bank reduced its estimates of growth for the next 3 years, and particularly for this year, it reduced its estimate of growth from 1.7% in 2019 to 1.3%, which shows us that they believe that load shedding is probably worth about 0.4% on GDP this year. However, our opinion is that growth should resume, probably quite slowly, and so long as load shedding does not return. And nobody really knows the answer to that question. Load shedding could come back at any time, and when it does, it has a huge impact on particularly small businesses in South Africa. The February budget that was brought out by Tito Mboweni, the Minister of Finance, we can now clearly see that this was simply a holding budget designed to mark time until after the election. It contained nothing of significance. In fact, the Business Day, their journalist Chris Gilmore interviewed Davy Root, who's a well-known economist from the Efficient Group, and he said 4 things which I think are important. First of all, he said that South Africa has gone over the fiscal cliff. It's gone over the fiscal cliff. In other words, the state debt has exploded. He says it's got so much bigger, and it's going to be very difficult to pull it back into a normal or reasonable level. He says there are huge cutbacks that are required now, but they are politically unachievable. That's exactly what Davy Root said. And he says the 69 billion rand that has been budgeted for Eskom over the next 3 years is hopelessly inadequate. He also believes that a Moody's downgrade will be inevitable sooner or later. So the little reprieve we've had is not going to last, in Davy Root's opinion. Of course, the long-term consequence of load shedding has been that Eskom will end up with less customers. At least 3 major mining companies that we know of are working on alternative energy solutions, putting in photovoltaic farms, and they intend to derive their power from their own sources and to sideline Eskom completely. It's notable that Eskom's mining customers, in other words, mining houses that bought electricity from Eskom, has fallen from 1,054 customers in 2013 to 993 by 2017. And of course, a lot of that will be due to the closure of mines and the falling of commodity prices. But I think a good deal of it is due to the unreliability and the cost of Eskom power. It's making it viable and practical for businesses right throughout South Africa to look for an alternative source of power. Of course, there's one more thing which will definitely, I mentioned earlier, and that is the petrol price. And it's worth remembering that of the 1 Rand 31 per litre that the price will go up today, 15 cents of that is a tax increase and goes straight to the government. And of course, tax collections are under pressure. We saw that recently. It was reported that in this last period we are 57.4 billion Rand under the budget. So this is now the 5th year that SARS has collected less than was budgeted for. And that, of course, is largely due to Tom Moyane and the destruction which he wrought in the receiver's office. Now, of course, we've just had the news that Edward Kaiswetter is appointed as the new head of SARS. He previously trained under Pravin Gordhan when Pravin Gordhan was head of SARS, so he was well trained there, I think, and he is probably the best guy to do the job. And he will be trying to return SARS to its previous levels of efficiency. Looking elsewhere in the economy, new car sales came out. New car sales are always a good indicator of how the economy is doing, because consumers can always postpone buying a new car. If they're feeling under the whip financially, they can always repair the old car, make it last for another year, and that tends to mean that new car sales are something that people do. People buy new cars when they are feeling economically strong, when they're feeling financially strong. So the 13% fall in new car sales in South Africa in February was a big shock to economists, and it's been carried through to March as well. Consumers are probably waiting for after the election. They don't think it's wise to be spending cash until we know what's going to happen in this election. If the election is marred by violence, there could be a strong negative impact. But the good news in the vehicle sales is that vehicle exports were up strongly again, up 22.5% to 33,700 vehicles. That means that we now export more vehicles in South Africa than we consume locally. All right, all these things have an impact on the Rand, so I'd like to just take a quick look at the Rand, as we usually do. All right, obviously we can expect the Rand to be more volatile in the run-up to the election. That is inevitable. Load shedding, of course, raised the spectre of the Moody's downgrade, and you can see here on the Rand chart, here the Rand is weakening. In this chart, as the chart goes up, it shows that the Rand is weakening against the dollar. And you can see this period, which is basically the run-up to the election. Then the Moody's reprieve came through, and the Rand strengthened back to about 14.17. If we put a bit more data on the screen, if I put 1 year data on the screen, what you can see here is that the general trend for the last 6-8 months has been that the Rand has been strengthening. And that should be a source of some comfort to us, because it shows that international investors are not dumping the Rand. They don't expect the election to be a complete disaster. In fact, they are expecting that Ramaphosa will get returned, and that he'll get returned with something of a mandate. So now the Rand is really a direct reflection of the ANC's prospects in the election for the moment. And the Rand has not collapsed. It's weakened a little bit, yes, certainly, that you would expect because of the uncertainty. But clearly overseas investors can see that the South African economy will improve in time and after the election. Another good measure of international perceptions is the long bond. And here I'm talking about the R186, which is our long bond. The yield on that long bond is a very good indication of what is happening. All right, this is where we had Nene being fired, right? So the Minister of Finance was fired. That's what the spike is. And then, of course, Gordon took over, and you can see how things improved steadily under his leadership. Then he was fired, which caused this weakness here. And then, of course, we had the ANC's elective conference that came towards the end of 2017, and then Ramaphosa has been in control during 2018. So this is the sort of Ramaphosa euphoria period here, and reaching that low point where they where the RSI was at a low point of 7.9%, which is a very low yield. Obviously, overseas investors, when they look at South Africa, if they see it as politically risky or economically risky, then they need a higher yield in order to attract them into our long bond. So when yields fall, it means that they have a good perception of South Africa. When the yields rise, they have a poor perception. And you can see here from that point there, which was in about February, March of this year, you can see how the R186, the yield on it, has weakened. But then in recent times, it started to improve again, and it's come all the way back down to about 8.5%. So this shows how how international investors perceive South Africa and what they think is going to happen in the election. What is clear, though, is that they're not expecting the election to be a disaster. That seems to be fairly clear from both the rand and the long bond. All right, let's turn our attention now to the commodities situation. There are a couple of points I just want to make there. The first one is that you may not have realized it, but there's a huge discovery of natural gas which has been made in the Rovuma Basin in Mozambique. Once this is fully exploited, it is expected to yield about $18 billion a year to the Mozambique economy. So suddenly that economy is going to become one of the wealthiest economies in Africa from being one of the poorest. And of course, that has huge spin-offs for South Africa, because we are their next door neighbor, and we are the only country in the area which has got significant engineering, significant financial capabilities. And our companies are in there, boots and all. Standard Bank is doing the finance for a lot of these projects. Sasol, of course, is using its technology. In fact, Sasol has built a 175 megawatt power station on the border with Mozambique recently. They're also involved in building the gas pipeline from the Rovuma Basin to Gauteng, and that will obviously have a big impact on South Africa generally, including on our energy situation. But of course, there is a bit of a limited time frame here. The world is moving away from hydrocarbons, so the Mozambique authorities are trying to get this thing done as quickly as possible. They want to exploit this resource as quickly as they can before the world moves on to, for example, electric vehicles. That will not help them at all. So, Mozambique, Rovuma Basin, it could be a big factor for South Africa. It's already a factor, but I think it will be a bigger factor in the future. Then the other thing I want to talk about is the conflict going on between the union movement AMCU, which is led by Joseph Matunja, and Sibanye, the gold platinum mine, which is run by Neil Froneman. This battle, where AMCU has declared a strike on the 21st of November last year, so they're now approaching 5 months on strike, which means that their members have not been paid during that period. It's kind of a microcosm of what we believe will happen after the election, because a battle with the unions generally in South Africa is something that will have to be fought at some point by the government. So that's what makes this AMCU-Sibanye battle very important. Sibanye has done two things since then, since I last spoke to you. First of all, they've retrenched 5,800 people at Beatrix and Driefontein mine. and a lot of those people are AMCU members. So those people have not got a job. I mean, they were on strike, but now they haven't got a job at all. And the courts have upheld Sibanye's right to retrench them, although AMCU, of course, opposed that. And then the other thing is that AMCU tried to get their strike spread to the other mines of South Africa, mines which had nothing to do with Sibanye, and the court has disallowed that. So they can't spread that strike any further. And it's clear to me, and I think to quite a few analysts, that Joseph Matunjwa made a miscalculation. He thought he could win this strike action, and as it turns out, he can't. Of course, Sibanye is being supported by the rising palladium price. They have a huge palladium mine in the USA, in Louisiana, at a place called Stillwater, and that is supplying them with cash so they can afford to ride this strike out. If Matunjwa has to withdraw and cancel that strike, he will lose face and will probably no longer be able to be a union leader. So he is trying everything he knows to get that strike to work, and so far 9 people have died through violence, and 60 houses have been burnt in the area as he tries to keep people on strike. But I think he will lose. Eventually he will lose, and he will have to withdraw from the strike, because Neil Froneman, the CEO of Sibanye, he's not moving 1 inch. He has made his offer, and they either accept it or they don't. And I guess that he knows that he's in a very strong position too. All right, to finish off with today, I'd just like to look at a few companies that I thought were worth consideration. The first one is Growth Point. We don't usually talk about the real estate investment trusts which are listed on the JSE, because they tend to be very boring investments. They're not very exciting. But Growth Point is the biggest real estate investment trust listed on the, South African one, listed on the JSE. It's got a market capitalization of 70 billion rand, approximately 70 billion rand, but it owns properties which are worth 138.7 billion. And it's trading below, the share price is below its net asset value. Now normally property rates, especially big ones like this, perform pretty much in line with the long bond. In other words, the R186, which we looked at just now. And their performance is generally pedestrian. Now, Growth Point has recently taken the decision to withdraw its option from shareholders to take a scrip dividend. In other words, what they're saying is that shareholders have to take a cash dividend. They can't take their dividend in shares, which is called a scrip dividend. And the reason for that is that if they did allow that, it would reduce the net asset value of Growth Point even further. So this shows that Growth Point is very aware of the fact that its shares are trading at a lower price than its net asset value. And that is a reflection of the perceived political risk in this pre-election period. So now if you look at the chart of Growth Point, which is on your screen there, you can see that the current share price is pretty much the same as what it was 7 years ago. 7 years ago. So there's been no actual upward movement, strong upward movement in Growth Point over the last 7 years. And that, of course, aligns with the Zuma period and is directly linked to that, because Growth Point, of course, has got hundreds of properties all over South Africa, and it really is an investment in South Africa and its future. All right, the next company I want to look at is Metair. Now, Metair is a battery company. They make batteries. And their factory is located, their primary factory is located in Turkey. They also have interests in Romania. I just want to put a bit more data on the screen here. 5-year chart. Even more, maybe. Yeah, there we go. All right, now here you can see the Metair chart. The share price has been falling for some time until quite recently. So it's got interests in Turkey and Romania, and of course in South Africa. In other words, it's completely exposed to emerging markets. In its results for the year to the 31st of December 2018, headline earnings per share were up 16%, off an 8% increase in turnover. Much of that was due to its factory, which is called Mutlu, M-U-T-L-U, which is located in Turkey, which saw a 55% increase in profits, off a 27% increase in turnover. What is also interesting is that this emerging market, which is of course in Europe, but not part of the European Union, saw its currency, the Turkish lira, fall 17% against the rand. So it shows you the rand is not as bad as we might think. But obviously, Metair is a company that will benefit from the general shift to electric vehicles because they make batteries for electric vehicles. That's exactly what they do. And we think that it's got a very bright future. What's interesting is that at the moment, at the current price, it's trading on a price-earnings multiple of 6.9 and a dividend yield of 3.5%. We believe that this is an excellent value at this level, and that you should acquire some of these shares once you investigate further. But I mean, this is an investment in a future technology. We all know that the world is moving towards electric vehicles. They're all going to need batteries, and these people are right at the forefront of producing those batteries. Now I'd like to spend a little bit of time talking about Naspers. Naspers, of course, is the largest share on the JSE by market capitalization. And in fact, it accounts for about 20% of all the trades which are done on the JSE are done in Naspers shares. It's roughly 4 billion rands worth of Naspers shares change hands every day on the JSE, on average. It has a market capitalization of just under 1.5 trillion rand. And of course, the big thing that Naspers owns is 31% of a company called Tencent, which is listed in Hong Kong. And this company specializes in gaming and social media in China. It has been somewhat constrained by Chinese legislators who are trying to curb gaming in China, and some of its games like Monster Hunter World have been disallowed. But 13 different Bloomberg analysts who report to Bloomberg, see it as worth more than its current share price. And that current share price is 3,388 rand. And these analysts on average see it as being worth about 4,250. My opinion is that it's worth even more than that. I think it's worth closer to 5,000 rand. So it's trading at a significant discount. In the 6 months to the 31st of September 2018, its headline earnings per share went up 39%. And this is, now I'm talking about Tencent here. So Tencent, and that gave it headline earnings per share of 1.7 billion rand, billion dollars, US dollars, which is 23 billion rand, and it achieved that in just 6 months. So this is a massively profitable company. And its turnover jumped 29%, which is exceptional for such a large company. Of course, the Chinese economy has been cooling somewhat, and Tencent has announced that it will cut its workforce, but it has also won the exclusive rights to make a game out of probably the most popular series on TV these days, which is Game of Thrones. It will have the exclusive rights to make a game out of that. And you can imagine that will be sold all over the world. Now, the problem with Naspers is that it has a skewed control structure. The company is controlled by its A ordinary shareholders. So the A ordinary shares are not listed on the JSE. The shares that you see here on your screen now are the N shares. So the A ordinary shares, there are 907,000 of them. And they control 67.4% of the votes in this company. So they control 1,000 times the voting power of the N shares. So an N share is a share which has very low par value. And under South African law, the voting rights of a share are determined by its par value, not its market value, but its par value. The par value of a share is the price for which it was first issued on the share market. So the A ordinaries control that company through 67% of the vote, and the N shares just have to tag along. And of course, Naspers has got a wide range of other interests outside of Tencent. It owns e-commerce operations and operates in 120 countries worldwide. And it's been under enormous pressure to release shareholder value, which means closing the gap between its share price and what it's actually worth, which, as I said earlier, in my opinion, is worth about 5,000 Rand. To overcome that gap and to release shareholder value, the directors recently listed and spun out and listed MultiChoice on the JSE. And that gave all the existing holders of Naspers shares a nice little piece of change for doing nothing. Now, in order to release value further, it is planning to list a new company on the Euronext, which is in Amsterdam. It's a stock exchange in Amsterdam. That new company, they call it NewCo for the moment, will contain all of Naspers' interests in which are outside of South Africa. So it's IT interests outside of South Africa. It's international assets, including its shareholding in Tencent. We believe that this will result in a significant drop in the volume traded on the JSE, because a lot of overseas investors will choose to make their transactions on the Euronext and not on the JSE. But we also believe that it will cause the Naspers share price to go up on the JSE. So we think that it could result in an upside move here. And you can see here on the screen that the Naspers share price has been in an upward trend since November. So we still think that this share is good value at these levels. All right, the last company I want to look at is Master Drilling. Now, Master Drilling is a company that I've worked on before. I've talked to you about it before. They are a company that is involved in drilling holes, exploration holes for the mining industry. Primarily, they've been involved in drilling holes for the mining industry. So here you can see that this share has been in a downward trend until recently. They've also recently diversified into construction. And this is because they've been moving into a new technology. They've developed what effectively amounts to a tunnel boring machine. They developed it in order to dig horizontal tunnels for mining houses. So they didn't want to just sink the shaft for the mining house. They then wanted to do the stopes, the horizontal stopes out from the central shaft. And to do that, they developed this tunnel boring machine, which is much quicker than the old traditional methods of blast and clear, which were used by mining houses all over the world. It also this new technology can dig a tunnel which slopes up or down by up to 12 degrees. They've just acquired the right to do a 7-month test of this machine at Northern Plat's mothballed Eland mine. So Northern Platinum has got a mine called Eland, which is mothballed, it's not operating, and Master Drilling is going to test their tunnel boring machine at that place for the next 7 months. Now, if you look at Master Drilling's results for the year to the end of 2018, so to the 31st of December, they show turnover up 14%. The CEO says conditions were worse in Turkey and India, but much better in Brazil and Mexico. The company now has 143 drilling machines worldwide, and it operates in a lot of mining countries throughout the world. It's also involved in a joint venture with a company called Ghella, G-H-E-L-L-A, to do tunnels for the construction industry, which are mostly obviously to do with road construction, where they're boring a tunnel through a mountain in order to put in a road tunnel there. The share has been on a long downward trend, as you can see from your chart. But recently it produced what we call a reverse head and shoulders formation here, and it's broken up out of that head and shoulders formation and appears to be on the cusp of breaking upwards through its long-term downward trend line. So I'll just bring a bit more data on the screen. You can see that this downward trend line has been in place since 2017, and it looks like it might now be breaking up out of that downward trend. So we recommend that this share is one which has a disruptive technology that it owns and that it's developed, and that will have a huge impact on the mining industry, both here in South Africa and throughout the world. Ladies and gentlemen, that's all I have for you today. I hope that you found something of interest there. Of course, there's a lot more detail in the notes themselves, so I do urge you to go onto our website and read those. Otherwise, I'll be talking to you again in May month, just before the election. Bye-bye for now.